Welcome back to AlgoBot, the channel where we take apart automated trading strategies and study how they actually work, line by line. I'm your host here at AlgoBot, and today we're exploring an expert advisor for MetaTrader 5 called Momentum Percentile Breakout. This strategy takes a fresh angle on an old idea. Instead of judging momentum against a fixed number, it ranks each push against the market's own recent history. By the end of this video, you'll understand how it reads momentum, how it decides when a move is genuinely unusual, and how it manages both long and short trades. Let's dive in. So what exactly does this expert advisor do? At its core, Momentum Percentile Breakout is an adaptive momentum system for MetaTrader 5. Most momentum tools compare a reading to a fixed level, a set indicator value, or a fixed price move. The problem is that a fixed level means very different things on a quiet pair versus a wild one. This strategy sidesteps that by ranking momentum against its own recent distribution, so a strong push is always judged relative to what has been normal lately. The engine driving it is a percentile rank of momentum. Momentum itself is the net displacement of price over a chosen number of bars. The strategy stores a rolling history of those values and expresses the latest one as a percentile, where it falls within the recent range. That single number, between 0 and 100%, is scale-free, which is why one parameter set can travel across different symbols and time frames without constant retuning. On top of that sits an EMA baseline, a 50-period moving average that keeps trades aligned with the prevailing trend. The strategy only takes long signals above the baseline and short signals below it, so it isn't fighting the broader direction. It's fully symmetric, treating longs and shorts with identical logic, and every trade carries an ATR-based stop and target for defined risk. Who is this style suited to? It leans toward traders interested in trend and breakout behavior on liquid instruments. Think major currency pairs or gold, on time frames from 15 minutes up to 1 hour. As always, this is educational information about how the code behaves, not a recommendation and not a promise of any outcome. Trading carries real risk, and losing trades are a normal part of any approach. Let's break down the mechanics step by step. Every time a new bar closes, the strategy takes a single reading. First, it measures momentum, which is simply the current closing price minus the closing price a set number of bars ago, 12 bars by default, controlled by the momentum period input. That gives the net distance price has traveled over that stretch. Now comes the clever part. Rather than comparing that number to a fixed threshold, the strategy ranks it against its own recent history. It keeps a rolling window of the last 100 momentum readings, set by the RankWindow input, and asks a simple question. What fraction of those readings are at or below the current one? The answer is the percentile rank, a value between 0 and 100%. A rank of 90 means the current push is stronger than 90% of the recent past. Because it's measured on the market's own scale, the same setting behaves consistently on a calm pair and on a volatile one. For a long entry, two things must line up. The percentile rank must freshly cross up through the upper band, which sits at 85% by default. The strategy only takes the very first bar of that crossing, so it catches fresh expansion rather than an already stretched reading. At the same time, the closing price must sit above the EMA baseline, confirming the larger trend is pointing up. Only when a fresh, unusually strong push agrees with the trend does the strategy open along. The short side is a mirror image. The rank must freshly cross down through the lower band at 15%, and the close must sit below the EMA baseline. That combination describes an unusually strong downward push within a downtrend. Exits are handled three ways. Because momentum tends to fade, an open trade is closed the moment its rank slips back through the midline at 50%. The strategy banks the impulse and steps aside. Behind that sits a protective stop placed 2 times the current ATR away and a wider target placed 4 times ATR away, giving a reward-to-risk shape of 2-to-1. Whichever comes first ends the trade. The system holds just one position per magic number at a time. Here's the heart of the expert advisor as it appears in MetaEditor. At the top are the input parameters you can adjust in the strategy tester. MomentumPeriod sets how far back momentum is measured. RankWindow sets how many past readings form the ranking distribution. UpperPct is the band a rank must cross to signal along, and the lower band is simply 1 minus that value. Baseline period controls the EMA trend filter, exit percent is the fade exit midline, and the ATR inputs govern the stop and target distances. Below the inputs is the long block. The Boolean cross-up is true when the previous rank was below the upper band and the current rank has reached or passed it. That's the fresh crossing. The strategy also checks that the last close is above the baseline. When both are true, it reads the ask price, places the stop 2 ATR multiples below entry, sets the target 4 multiples above, and, as long as the stop distance is positive, it calls trade.buy with the lot size, stop, and target. The short block mirrors it exactly. Cross-down is true when the previous rank was above the lower band and the current rank has dropped to or below it. It confirms the close is beneath the baseline, then reads the bid price, places the stop 2 ATR multiples above entry, the target 4 multiples below, and calls trade.sell. Because the stop and target are attached to each order at entry, the position is protected from the moment it opens, whether or not the momentum fade exit fires first. Both sides share the same logic, just reflected. Let's walk through an illustration of how the strategy trades, using a chart with 2 parts. On top are the price candles with the blue EMA baseline running through them. Below is the subpanel showing our momentum percentile rank, on a scale from 0 to 100%, with a long band at 85, a short band at 15, and a fade exit midline at 50. We begin on the left with a gentle pullback. The first few candles drift lower, dipping slightly below the EMA baseline, and in the subpanel the percentile rank sinks toward the low 20s. Momentum here is weak and below its recent average, nothing for the strategy to act on. It simply waits and keeps ranking each new reading. Then the character changes. On the 5th candle, price surges upward with a strong bullish body that closes back above the EMA baseline. Watch the subpanel. The rank leaps from the 40s up past the 85 band. That's the fresh crossing the strategy is looking for. The previous reading was below the band, and this one has broken through it. With the close now above the baseline confirming an uptrend, both conditions are satisfied, and the buy entry marker appears. This is momentum shifting gear, an unusually strong push that agrees with the larger trend. From there, the move extends. The next 2 candles print higher closes, and the rank stays up in the high 80s and 90s, showing the push is holding rather than fading. The stop sits 2 ATR multiples below the entry, down near the base we came from, while the target sits 4 multiples above, giving that 2-to-1 reward to risk shape. On the 8th candle, price reaches the take profit target and the long is closed for a completed move. Notice the exit came from the ATR target here, catching a strong run before momentum had a chance to roll over. And roll over it does. Just after the target, the rank drops back through the 50 midline, the same fade exit level that would have closed the trade on its own had the target not been reached first. Price stalls. Then the candles begin to turn down, curling back toward and then below the EMA baseline. Now the mirror image sets up. On the 11th candle in our sequence, price pushes down hard with a strong bearish body that closes below the baseline. In the subpanel, the rank plunges from the low 30s down through the 15 band. Again, this is a fresh crossing. The prior reading was above the band. This one has dropped beneath it, and the close is now under the EMA baseline, confirming a downtrend. Both short conditions line up, and the sell entry marker appears. The downward move then plays out just like the long did, only inverted. The following candles print lower lows, and the rank stays pinned down in single digits and low teens, telling us the selling pressure is unusually strong and persistent. The protective stop sits 2 ATR multiples above the entry, and the target sits 4 multiples below, once more a 2-to-1 shape. On the final candle, price reaches the lower take profit target and the short is closed. Step back and you can see the symmetry. In both trades, the strategy waited for momentum to become genuinely unusual by its own recent standard, demanded that the move agree with the EMA trend filter, entered on the fresh crossing, and then let a defined ATR stop and target frame the outcome, with the momentum fade midline standing by to bank the move early if the push lost steam. It isn't chasing every wiggle. It's waiting for the rare readings that stand out from the crowd of ordinary noise. Of course, not every signal in real markets resolves this cleanly, which is exactly why the fixed stop is there on every trade. And that brings us to the end of our breakdown of Momentum Percentile Breakout. We covered the core idea of ranking momentum against its own recent history, the percentile rank engine, the EMA baseline trend filter, the symmetric long and short entries on a fresh band crossing, and the ATR stop, ATR target, and momentum fade exit that manage every trade. Remember, everything in this video is educational information about how the code works. It is not financial advice, not a recommendation, and not a promise of any particular result. Trading involves real risk, and losses are a normal part of it. If you found this useful, please like the video, leave a comment with any strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.